Good afternoon, everybody. Uneducated economist here. So things are getting really wild out there in the markets right now. We saw another huge down day in the markets today. We're seeing closures, cities shutting down. They're shutting down the restaurants, the bars, the activities, instituting curfews. I was thinking about the whole curfew thing. Is the curfew really to help hold back the spread of the virus? Is that what's really going on with the curfew? I mean, are they really worried about somebody spreading a disease between 10 p.m. and 5 a.m.? I mean, that kind of disease anyway. No, that curfew is to keep people from breaking into cars and houses. That's why they institute a curfew in the middle of the night. Because the only people who are out at that time are up to no good. We're coming into some strange times here, guys. Think about this for a little bit. The Federal Reserve has promised to inject $700 billion through a quantitative easing program where they promise to start buying U.S. treasuries. And what's going on with the U.S. treasuries right now? Have you seen what's going on with the 10-year? The 10-year is the basis for all loans, all credit cards, house loans, car loans. Wherever the 10-year goes, so do go the rest of the interest rates. And the yield on the 10-year is starting to rise. Despite the Fed's promise to start buying treasuries, people are not interested in attempting to front-run the Fed. See, typically investors would see, okay, the Fed's going to start buying treasuries. Well, that will lower interest rates. Well, before they can lower the interest rates or the interest rates drop on those treasuries, I'm going to go and buy a bunch of them. So when the interest rates drop and the prices go up, I'll be able to sell it for a profit. But guess what? People are no longer interested in the treasury as being a safe haven asset. They don't look at it as a safe haven. They're not seeing gold as the safe haven. They don't see anything out there as a safe haven asset except for the dollar. The dollar is growing ever stronger. Go look at the dollar index. It's over 100 now. Just a week or two ago, it was at 95. Every time the Federal Reserve says we're going to step in and start stimulating this economy and we're going to do things in response to this virus, the markets hate that news. I said it a long time ago. There's two places I like to be: cash and silver. And now my idea of cash is definitely playing out. Banks are reporting that mass amounts of people are pulling cash out of the banks. And now they're limiting the amount of cash that you can pull out in a single day. They're starting to shut the lobbies down and making you go through the drive-thru. I'm getting a lot of reports of that. I know it's at my bank. They shut down branches that don't have drive-thrus, and if they have a drive-thru, they're forcing you to use that as opposed to going through the lobby. Emerging markets are suffering big time. They weaken their currency, and they have promises made in US dollars, and it takes ever more increasing amounts of their currency in order to come up with the dollars that they need to pay off their debts. And it's becoming very difficult for them to do that. And emerging markets are starting to suffer from this. People gave me a hard time when I said that cash is king, and a lot of people will say to me, cash is trash. Yeah, it may be at some point, but right now, it's the only thing anybody wants. One of the other things that I read was Ben Bernanke and Janet Yellen. These are former chairmen for the Federal Reserve. They're suggesting that the Federal Reserve start buying corporate debt. Can you imagine that? They can't do it yet. They need congressional approval. But that's what they're suggesting that the Federal Reserve do in order to support this economy, to keep that corporate debt from falling any further. See, a lot of pension funds out there, they have been underfunded for a long time, and they are in search of yield. Normally, they would want to try and find that inside of the government bonds. But government bonds, U.S. treasuries, they don't have much of a yield to them. So instead of buying government bonds, they've been buying corporate debt, the high-yielding corporate debt, junk bonds. They're called junk bonds because these corporations are at risk of not paying back their debts. And if they can't roll that bond over into a new bond, guess what? Down that goes, and the interest rates rise. And those pension funds, when it comes time to sell those bonds, the ones they purchased, they sell for a lot less than what they paid for it. And they become even more underfunded. And in order to keep that from happening, the Federal Reserve is, they're suggested by their former chairmen to print up money and buy those bonds to keep those interest rates down and to keep the prices up. Companies that should never have existed in the first place have been feeding off of this low yield. As people are in search of higher and higher yields that keep, while the interest rates were dropping, these zombie companies were just eating it up. And now you have all this shutdown taking place across the nation, and these corporations are not going to do well from this. And you're going to see a debt implosion. Like I said, even though the Federal Reserve has been printing up a lot of money and trying to inject it into the banking system, it's not working. People are pulling it out. People are in need of cash. They need that cash in order to make their debt payments. And they're selling off everything in order to get it. You know, I have never been so confident in silver as I am right now, even with the prices dropping like they are. I know that silver is outside the system. I know the reasons why it's dropping. It's dropping due to paper manipulation. There is over 100 ounces of paper silver for every 1 ounce of physical out there. And all these investors who have been trying to play off the price have been buying a lot of paper silver, and they're dumping it right now, trying to get the cash. And it's driving the spot price down. But go look at the physical price. Go check out those online dealers. You'd be lucky if you could find an ounce for under $17, $18. Things are getting very strange out there, guys. It's getting very strange. And if Congress approves the Federal Reserve to start buying corporate debt, you're going to see zombie companies growing ever bigger, feeding off of this money printing bullshit that's taking place. You know, all the hard work, all the savings that people have done. The Federal Reserve is trying to weaken the currency. They're trying to destroy the currency, and it's not working. People are they're getting out of everything. And at some point, that's going to change. At some point, all this fear is going to subside. And all that money is going to have been printed. And people are going to have hordes of cash, and they're going to want to put it somewhere. And when they see that these corporations have been feeding these zombie corporations, these companies that should never have existed in the first place, and the Federal Reserve has just been stuffing that money into them, they're going to start running for a safe haven. See, gold is a safe haven to inflation. But we're suffering through deflation right now. Or stagflation. But when the fear of inflation starts kicking in, then you're going to start seeing the metals rise. Right now, you don't see it because everything is deflating. Everybody's getting out of their trades, including the Treasury. See, I knew interest rates were going to rise. I knew at some point these interest rates were going to rise, even in the face of the Federal Reserve printing. Cash is not trash. Cash is what every contract is written in. US dollars. They don't want anything else. They don't want Bitcoin. They don't want gold. They don't want somebody else's promise. They want those dollars because that's what the contract is written in. I'm going to leave links down in the description for you guys. I got links to a few articles there that are very important. If you haven't read them, take a moment of time. It's, it won't take you very long, and you should read some of these articles, because whatever it is that people have said about, the dollar being destroyed, yeah, at some point I believe it, but right now it's the only thing anybody wants. Uneducated economist. You guys let me know.